market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, let's begin with the Bloomberg scoop on the latest development in the trade war between Washington and Beijing. The Trump administration is planning to expand chip controls over China and pressure key allies to help with tougher restrictions. Let's bring in Bloomberg's Jill Dices, who's in Hong Kong. Jill, Trump sends conflicting messages, frankly, on China, recently saying he has a great relationship with President Xi. Is he a friend or a foe of China?
Well, Francine, I think while Trump may say that, he has this great relationship with Xi, certainly a lot of the actions that his administration have taken are ones that are pretty tough on China. I mean, he staffed his cabinet with China hawks. You look at Secretary of State Marco Rubio, among others. He's already instituted, new tariffs on China, or up to, existing tariffs on China. And now it does appear that he's kind of continuing on with, sort of pushing ahead more aggressively on some of these Biden administration era rules on chip curbs. So the latest one that we're reporting on now, taking a look at, U.S. officials talking to their Dutch and Japanese counterparts about limiting, the ability for ASML or Tokyo Electron to have semiconductor gear in China. I mean, this is really this idea that's just furthering what we've already seen out of, U.S. officials over the last several years, which is trying to curb China's development on chips and trying to sort of curb, their advanced technologies.
Jill, the NVIDIA chief executive was also pretty hopeful that President Trump would opt for a lighter regulatory touch. Are Trump's policies on chips an extension of his foreign policy, or is it actually just pure commercial reasons?
I mean, I think, your answer there is kind of just yes, both. I mean, on the one hand, you do have U.S. officials that have been pretty serious about saying that, they've got national security concerns about China's ability to develop advanced technologies, advanced chips. Again, we saw this during the Biden administration under former Commerce Secretary Gina Raimondo, when you really saw these concerns about, what Huawei, for example, was developing and how that could kind of lead to more advanced chip technologies in China. It does seem like, there's an element of that that's certainly a concern for the Trump administration. But then, yes, I mean, there's a commercial aspect to this as well. You take NVIDIA, for example. I think, there's been a lot of attention paid to what exactly happened with, the development of that Chinese company, through the DeepSeek AI program earlier this, that model earlier this year. You saw, some conversation about them using older NVIDIA chips to sort of develop this lower cost AI model that's, hitting benchmarks equivalent to some big American firms. So there's, and that obviously had a pretty big impact on the U.S. stock market. So there's certainly a commercial aspect to that there. But of course, this kind of, goes without saying that there's a big national security concern here as well. The U.S. has really kind of, sort of for a while here wanted to make sure that they're staying on top of the semiconductor game when it comes to what they're doing against China.
Jill, thank you so much. As always, Jill Dices there in Hong Kong with a terrific briefing on some of the Trump policies and actually what that means for the tech sector in China in particular. Now, the U.S. has withdrawn its previous stance, condemning Russia's invasion of Ukraine at the United Nations, a pretty dramatic policy reversal from President Biden's administration and another blow to ties with the EU. Now, this comes as French President Emmanuel Macron also visited Trump in Washington to try and get Europe back to the table in talks with Russia. Well, speaking during a press conference in the Oval Office, Macron corrected Trump about European support to Ukraine.
Europe is loaning the money to Ukraine. They get their money back.
No, in fact, to be frank, we paid 60% of the total effort, and it was through, like the US, loans, guarantee, grants, and we provided real money, to be clear.
The body language is also something to behold. Now, later in the show, we'll discuss the geopolitical change of direction from the White House and what it means for Russian President Vladimir Putin with Bill Browder, the celebrated author and, of course, critic of the Kremlin, who was the largest foreign investor in Russia until 2005. He's on the program in about 25 minutes. Now, Donald Trump says tariffs due to hit Canada and Mexico next month are on time and moving along very rapidly. This comes even as U.S. officials caution that the fate of the special 25% levy on the two countries was still to be determined. Well, let's bring in Christian Mueller-Glissman, head of asset allocation research at Goldman Sachs. Christian, as always, thank you so much for coming on. There's a lot, right? There's a lot to go through. Geopolitics, either be it with Russia, just also some of the things that President Trump is trying to do on China and chip makers. First of all, how do you cut out the noise to actually what changes the fate of U.S. equities?
Yeah, I think you've got to ask yourself what are the most important things, the most important drivers of U.S. equities. And it's been AI and the U.S. consumer. And we need to understand how all the policies and what's going on in the world is impacting those two drivers. And the market is getting more nervous. You have had data that's been mixed, like on Friday, the service PMIs, the inflation expectations going up. That might reflect the tariffs. It might show that tariffs are kind of a bit of a tax on the consumer, possibly hitting the consumer. And as you were mentioning already, we have this lingering uncertainty with regards to AI CapEx, DeepSeek. So I think these are the two things that we look at in particular in the US, the consumer and AI, and how that's going to impact the S&P, in particular the ROE. Like what we've been saying for a long time is return on equity in the S&P can justify these elevated valuations. Right. If it starts coming down, i.e. profit margins, like we have results from NVIDIA on Wednesday, we're all watching very carefully if you can maintain profitability in the face of these headwinds.
But Christian, when's the right time to diversify if you do start worrying? I mean, we also had the University of Michigan number on Friday. That was a little bit worrying.
Yeah. I think we've been arguing for diversification across and within assets already at the end of last year. Okay. So we've been saying that, first of all, you want to think about more balance in the portfolio. If you look at last year, most of your performance was driven by equities and was driven by U.S. equities. So the idea is from here, you probably get more broadening out. Maybe you have the bond market contribute a bit more in terms of returns, not necessarily because bond returns are higher, but maybe equity returns are lower. Maybe equity risks are higher, bond risks are lower. So we've been advocating balance, a balance between equities and bonds. And then, as you were already saying, regional diversification, which arguably is a good idea. Certainly academic evidence points towards that, and recent evidence points to that. I think it has a bit of a comeback right now. We've seen that year to date. China, Europe have had a significant outperformance versus the US. And obviously, as we're discussing, even within the US, there's been a broadening out relative Max 7 and 493. So I think we're dealing with a huge opportunity and necessity for diversification.
Where do you see the biggest opportunity right now? As you say, Europe has been unloved for many years, but there's so much concern about growth and also what happens with Ukraine. If you get the big stocks, is that a way of actually almost hedging against some of the nasties in Europe?
Yeah, I think I would argue that Europe is a bit more difficult as a kind of a momentum trade, you could say, because most of the kind of potential we see for European equities is coming via risk premium reduction, less via earnings growth. The earnings growth is going to be a much slower grind. So our economists have upgraded their German GDP forecasts in function of the election results. We've obviously looked at the Russia-Ukraine deal, but a lot of the potential impacts on growth might be a bit more backloaded. So near term, you rely on risk premium. And European equities are already a bit above their long-run average valuations. So that makes it a bit more difficult to get too excited about the runway in Europe. We're a bit more selective. So we've been very focused on quality. You mentioned it already, and low volatility, because we do kind of like adding duration to equities, and adding low volatility quality is a bit like adding duration within the equity space. So it is kind of a bit more defensive into a pretty uncertain backdrop, as you were saying from the beginning, with tariffs, with the growth picture breaking away, geopolitics.
Christian, what do you do with is there anything to do with gold right now?
Well, we've upgraded our target to 3,100. And what's so nice about gold, as an asset allocator, you want to have things that are not correlated to each other. And gold is currently having this very idiosyncratic outperformance, which is probably most likely driven by central bank demand, which continues to be strong. And that's very valuable in a portfolio. Like historically, you remember gold had this link to real yields, to the dollar, this risk on, risk off link. And this link has started to soften a bit. There's still an element of that where gold reacts in geopolitical shocks. It reacts in broad, big risk-offs. And we haven't even seen that reaction yet. Most of the movements we've seen in recent months have been linked to tariffs and have been linked to concerns on geopolitics and central bank demand. So if you do actually get a U.S. growth issue emerge, like gold potentially still has some convexity left. If we look at investor positioning into gold, like ETFs, etc., it's still very low. So you haven't seen that safe haven rotation, which you often get.
Christian, I have a viewer question, but we'll get to break and then I'll ask you. They're asking about Asian equities, so I'll ask you what the catalyst for those are shortly. We're back with Christian Mueller-Glissman from Goldman Sachs shortly. Also, just very quickly, a big corporate story we're following. Unilever Chief Executive Hein Schumacher is to step down in a surprise move after less than 2 years at the helm of the consumer goods company. Unilever shares have fallen on the news. He'll be replaced by the current Chief Financial Officer, Fernando Fernandez, in March. Schumacher will leave the company at the end of May. Coming up, we'll have plenty more from, of course, Christian from Goldman Sachs. We also look at Germany and coalition building. This is Bloomberg. Welcome back, everyone. Now, still with us, Christian Mueller-Glissman, Head of Asset Allocation Research at Goldman Sachs. We have a viewer question. We love viewer questions, so everyone please write them in. You go onto TV Go, and then you can IB directly with the producers to ask any questions. Okay, this one, of course, directly to you. Christian, you were bullish in your last publication on Asian equities, both China and Japan targets. What catalysts are you now looking for?
Yeah, no, I think it's right. Part of our diversification has been Asia, it has been China. And I think in terms of catalysts, the macro picture is one thing. We're looking for macro surprises in China to maybe stabilize a bit. We're still waiting for the policy stimulus to have a bit of escape velocity. And we're looking for confidence to emerge a bit, like the velocity of money to go up, liquidity to flow, consumer spending. And I think AI and DeepSeek has a real potential confidence impact as well on the Chinese economy. That's one thing we want to understand if we can exit that liquidity trap. But the other thing is obviously we want to understand a bit how the China tech space now, which is still quite cheap. So if you look at, after even the rally we've already seen, the valuations, you're obviously trading at huge discounts to the US, but you also trade at discounts to their own history, a bit different to Euro. So we want to understand if these big companies might actually see benefits from incorporating AI in their business models much faster, because you have obviously now a technology which is directly accessible to them. You have the ability to scale that. And I think that creates some interesting investment opportunities. Certainly our Asia strategy team has been very focused on looking for AI beneficiaries in the whole Asia region. And it's actually a bit more stock specific. It's not just buying HS Tech, which I think has done really well. In a lot of cases, it's like scattered around Asia. But I think that are the two areas we really look for right now.
Okay, so interesting. Let's also talk a little bit more, of course, about German coalition building. And, of course, if you're a viewer and you have questions, I'm sure you have many, but if you have direct questions for any of our own viewers, just please send them to IB plus BBTV Go. Christian, let's talk about Germany, because Friedrich Merz is set to be the next chancellor. He'll have to negotiate his way into power, most likely with a coalition with the SPD. Now, this after Bloomberg learned that the chancellor in waiting is speaking with the Social Democrats to quickly approve 200 billion euros in defense spending. We're now joined by Oliver Crook in Berlin. So, Ollie, why is Merz rushing through this deal?
Yeah, Francine, it seems that Friedrich Merz's first act may not even be to form a government. It may be to force through this defense fund that we heard, we got sort of overnight from the scoop here from the Bloomberg team, which basically how this works, Francine. This is supposed to be a sort of defense fund like the one that Scholz established a few years ago of 100 billion euros, though we understand this one could be up to 200 billion euros. And how this would work, Francine, is this would be actually an off-budget fund. This would be fudging the debt brake. This doesn't require a reform to the debt brake, but it requires a 2/3 in Parliament, which is why Friedrich Merz may want to brush this into this Parliament session, because in that sort of Parliament session, that composition before the next one takes over from the election over the weekend can have that two-thirds majority in order to get this fund through. This causes a number of issues, of course, particularly after J.D. Vance has just come to Europe and talked about how undemocratic the sort of continent is, for basically this government to use the Parliament majority from the last session after a sort of election has taken place. That could be dicey, and that could come under intense scrutiny and intense criticism by now the second most powerful party in Germany, the AfD, who has in the past sort of been very critical of these sorts of things. But we understand that this is what Friedrich Merz is looking at in order to top up that defense spending. We should say, I spoke to the highest ranking general in Germany a couple of weeks ago, who referred to that first fund of 100 billion euros as only sort of starting to fill the potholes. So this may not be sort of taking us all the way that we need to go, but it would be a significant move in that direction, particularly in light of the fact that Donald Trump may not be securing European security any longer.
Ollie, thank you so much. Oliver Crook there, of course, with this Bloomberg scoop, Germany discussing 200 billion euros for emergency defense fund. Christian, when you look at this, this is a uniquely European story because of all the financial constraints. I mean, do you see this actually having a longer-term market impact?
I think what's interesting in this is, I mean, we have a new German government. It's a two-party coalition, most likely. That's already good. But you have that blocking minority, which complicates things. But I would say that there is an urgency here, which I think we haven't seen in European policymaking maybe for some time, that potentially allows front-loading some of the benefits with fiscal expansion, from military spending. So I'm actually looking at this as something where it again illustrates you have to be careful to be too bearish Europe, considering how the starting point on sentiment and positioning was at the beginning of the year. That's shifting right now, but also how you see those triggers for more positive momentum. So I would say that generally the policy backdrop currently in Europe has a lot of potential to surprise to the upside short term.
So interesting. Christian, thanks so much. Christian Mueller-Glissman, there, head of asset allocation research at Goldman Sachs. Now, coming up, G20 finance ministers and central bank governors are gathering in Cape Town with President Trump's proposed tariffs top of the agenda. We'll be live at the summit next, and this is Bloomberg.
Tariffs are a risk to the global economy and to the global disinflation process. And what I'm saying is that a year ago, it was not something that we were worried about because it didn't exist. Now that it is here, we have got to take that into account.
South African Reserve Bank Governor Letsetja Kganyago there speaking earlier on the sidelines of the G20 finance summit. Well, finance ministers and central bank governors are indeed meeting in Cape Town for the summit, the first since Donald Trump returned to the White House. Bloomberg's Jennifer Zabazaja is there for us. So, Jen, good morning. I imagine Trump's proposed tariffs are leading the agenda. So what more can you tell us?
Yeah, Fran, I think it's fair to say that that is definitely what we're hearing from a number of the officials that we've spoken to thus far. You just heard there from Kganyago, who was talking about, yes, he hadn't up until this point put this on the agenda to the extent that he now is having to think of it. And the expectation is that throughout the week, as we hear from finance ministers and central bank governors, that will be top of mind. We should remember that the G20 members make up about 85% of the world's GDP, 75% of international trade. So a lot of the speak about tariffs will have implications for their own economies. But also, you know, President Ramaphosa has tried to insist that this G20 is not just about what is happening outside of the African continent, but also the confluence of challenges that are happening on the continent that can affect other people. So, you know, I'm thinking about things like debt restructuring and servicing debt, reforms of multilateral institutions, which we've heard not just the president talk about, but also a number of officials. I was speaking to the central bank governor, Letsetja Kganyago, about that as well. So these are just a few of the priorities that we expect to hear from these officials, but also what they can do as a bloc, as a membership, to really fortify their own economies and help benefit one another.
Jen, thank you so much. Jen Zabazaja, there, Bloomberg's Africa correspondent. Of course, we'll have plenty more from Jen throughout the day. Now, this is also a little bit of breaking news from the Dallas Fed President, Lori Logan, who's speaking here in London at a Bank of England event. Now, she says the Fed should buy more shorter-dated assets in the medium term. She also says, look, they should keep money market rates near interest on reserves. And then they should also consider centrally clearing standing repo facilities. So I think we're looking at live pictures from the Bank of England, but we had the speech of head of Lori Logan delivering that. Now, one of Putin's leading critics, Bill Browder, gives us his take on Trump, the Western alliance, and the future of Ukraine. That's next, and this is Bloomberg. Good Good morning, everyone, and welcome back to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Bloomberg learns that the U.S. is pressuring allies to toughen chip curbs on China as President Trump says tariffs on Mexico and Canada are going ahead as planned. Will European stocks waver after a sell-off on Wall Street? The U.S. breaks with its allies, voting against a UN resolution condemning Russia's war on Ukraine, as the French president tries to get Europe back to the table for talks with Moscow. Plus, Tesla sales in Europe plunge as rival car makers see a surge in EV demand. So President Trump has deepened Washington's split with allies after the U.S. failed to vote to condemn Russia's invasion of Ukraine at the UN. Well, Trump's rapprochement with Russia has fueled worries in Europe, which has largely been sidelined during early negotiations. Well, Bill Browder wrote about his experiences exposing corruption in Russia, and last year was knighted for his services to human rights. Now, the best-selling author of Red Notice and Freezing Order led a campaign to persuade countries to adopt sanctions on Russian officials believed to be responsible for human rights abuses after the death of lawyer Sergei Magnitsky in a Russian prison in 2009. And Sir Bill Browder joins us now. Thank you so much for joining us. And what a day to actually speak to you and have you on. It's unclear to most observers why there's this newfound friendship or relationship between Donald Trump and Vladimir Putin.
It's totally unclear to me. I've spent the last 15 years advocating for tough measures against Vladimir Putin for all of his corruption and murder and so on. And my biggest ally was always the United States. The United States was always the most stalwart, always standing there, always doing the right thing. The U.S. people generally understand who Putin is, and certainly everybody in the U.S. Congress understands who Putin is. And so for Trump to this is not only appeasing Putin, it's to switch sides and side with Putin. And I couldn't have ever imagined in my lifetime that we would see such a dramatic shift of U.S. foreign policy.
Is this ideological, or is this to try and find a deal economically with Russia?
It's impossible to know. I mean, there's not that much economics to do with Russia. I mean, America was never a huge trading partner with Russia because there wasn't that much to trade. You know, what does Russia have? Oil. U.S. has more oil. Other than that, there's a few, there's some aluminum, some steel. The U.S. has plenty of access to aluminum and steel. And so there's certainly not a national interest in doing this. And so the question is, and I can't answer that question because nobody can answer that question, which is what in the heck is going on inside Trump's mind to basically break with the U.S. public interest?
I mean, do we have any idea of who he listens to? I mean, is this some of the things that actually President Trump has said seems to come directly from what Vladimir Putin has been saying about, for example, the need of new elections in Ukraine? Some of the things that, has also been said on who started the war. Is he being briefed by Lavrov, or is it someone inside his own administration that believes it?
Well, maybe he's being briefed by Tucker Carlson, because remember Tucker Carlson was also a big fan of Putin, and there's a small part of the U.S. establishment that has been and continues to be very pro-Putin. You had people like Marjorie Taylor Greene, Lauren Boebert, you had Mike Flynn, Steve Bannon, Sebastian Gorka. There was this sort of hardcore wing of the MAGA group that believes in that, but the vast majority of people in Washington, the Marco Rubios, the Mike Waltz, the General Kellogg, all these people, they've been around the foreign policy establishment for many decades. They know who Putin is and what he's up to.
Yeah, I mean, it's amazing to also see, people very close to Donald Trump avoiding naming Russia as the aggressor in Ukraine. What's Vladimir Putin thinking right now?
Well, he's popping
having a good week.
He's popping the champagne. He can't believe his luck. I mean, he was totally isolated, completely, totally isolated. Nobody wanted to deal with him. He was an indicted war criminal for crimes against humanity. He was sanctioned by every major G7 ally. He was completely in the doghouse, and all of a sudden he's been welcomed in with open arms by the most powerful man in the free world. I mean, he is just dancing the jig right now. He can't believe how good things have just suddenly gotten for him.
Bill, what happens next? I mean, does the world just watch and stand by and, everybody retrades with Russia as if nothing happened and we have a peace deal with Ukraine that could give Russia parts of the land? Or does Congress stand up to Donald Trump?
Unfortunately, Congress has no ability. So on foreign policy, it's the exclusive domain of the president to determine foreign policy. Congress can stand up on all sorts of domestic issues. The Congress can in theory restrict funding for the next budget, but Congress can't say who you can be friends with, how you vote at the UN, all that kind of stuff. I mean, I think I think we have dark times ahead. If this is the first step, what other steps is he going to take? And for example, there's all this talk about a trade war with Canada, and Canada produces aluminum. All of a sudden, Putin has offered aluminum. So, does the United States switch aluminum suppliers to Russia, and all of a sudden Canada, sits there in a terrible economic mess? I mean, there are so many different permutations that are impossible to predict right now, but doesn't look good for the free world.
What can Europe do? So we saw President Macron, show up in Washington. There was that press conference with that moment where he basically fact-checked Donald Trump by also gently putting his hand over his and saying, well, actually, Europe has contributed this much, and right. It's not exactly how you're saying it. But does it make a difference? It
absolutely does. So we should not underestimate the economic power of Europe. Europe has a bigger economy than the United States. Europe has more people than the United States. And if Europe were to act together militarily, then they could support themselves and they could support Ukraine. And what we've seen is a massive shift in the last 2 weeks. The new chancellor of Germany has just come out and said that they've got to spend hundreds of billions of dollars or euros on a military. I think that there's now talk about, if and probably when Trump withdraws from Europe as far as NATO is concerned, how Europe steps up. It's going to be a big change for Europe. And this is the one thing that Trump is very right about, which is Europe needs to take care of itself, and necessity is the mother of invention, and now Europe is in a position where it has to.
But will it? And again, at the moment, even with Keir Starmer going to Washington, it seems they're still trying to get Donald Trump on side. If they don't make leeway in that, I don't know if you think they can, then will Europe be able to stand strong alone?
Well, I mean, Europe has one big advantage right now, which is that Vladimir Putin, who's the main enemy of Europe, has completely exhausted himself. It's going to take him, 5 years or more to rearm and kind of recover from what was this disastrous war, assuming that the war ends, which we don't even know that to be the case, which means that Europe has 5 years, maybe more, to arm itself, to organize itself, to create a proper nuclear shield itself, and all the other things that go along with that. And so it's not as if there's a catastrophe tomorrow. There's a catastrophe in the future. And of course, the war has not ended in Ukraine. And it's not clear that Putin wants to end the war in Ukraine because he's winning now. He's all of a sudden, gotten the U.S. effectively to say, we side with you. And so we don't know how that's going to end. And what goes next in the Ukraine?
Will he stop at Ukraine if he gets part of Ukraine? And actually, do you think Donald Trump will be tough on him on that?
He's not going to stop with Ukraine. He's already said 1 million times. All you have to do is listen to Putin, and he's made these speeches. He doesn't like that Estonia, Latvia, Lithuania, and Poland are independent countries. They were part of his sphere of influence, and particularly the Baltics. And is Trump going to go to war with Putin over Estonia? No, of course not. He's not going to do that. And so I think that the new German Chancellor Merz said it very clearly that we have to think of a defense world after NATO, because we're not going to have that American protection in the future.
Bill, thanks so much, as always, for joining us. Bill Browder there, of course, on the very latest with President Trump breaking with allies and actually blaming Ukraine for the war. Coming up, as Mag 7 shares hit a rough patch ahead of NVIDIA earnings, we also head to Dubai to speak to the Bank of America Chief Investment Strategist. That's Michael Hartnett. That's next, and this is Bloomberg. Well, it's been a tough start to the year for big tech as concerns grow about AI spending. Investors are now turning their attention to NVIDIA, which reports earnings tomorrow. Let's head to Dubai and the Bank of America Investor Summit. Bloomberg's Guy Johnson is there with a very special guest. Hi, Guy.
Hey, Fran. Yep, Michael Hartnett's here. No introduction needed, really, I think, to introduce you. Bank of America. Legend, let's call you that. Let's talk a little bit about where are we today? Crypto's down a little bit. Nvidia's are about to report. Market feels fairly bumpy. What's the prognosis? What are you feeling right now?
Well, I think there's a little bit of suspicion about the S&P that's growing. I think Bitcoin has been a lead indicator for the retail element of the stock market. If you look at the average price that people have bought Bitcoin since the last election, probably about 97. So a lot of people are now underwater. They're the same cohort that's marched into, some of these bro bubble stocks like sort of Meta and Palantir and so. I think there's that short term that is somewhat problematic for the US market, but it's really this sort of peak exceptionalism theme. And are we right to be as long big tech and the NASDAQ and the dollar? No. I think that temporarily DeepSeek, has basically caused a peak in that story. Because, if you think about everyone is just all in on AI, but all in on US AI. And so you've got this story where, the concentration of the US market is such that you've got 7 stocks now, the Magnificent Seven, and they're worth $18 trillion. Suddenly DeepSeek comes along. It's like, well, wait a minute, we've got no Chinese, tech. And you look at the Fab 4 or whatever they're called in China, the BATX, that's $1 trillion of market cap. So I think there's definitely rotation out of US tech into Chinese tech. You can see it out of India also into China. So I think if you haven't got that tech leadership, if the speculative side, that's in the market is kind of like pulling back a little bit, you can see people are starting. We haven't even talked about all the policy stuff, and it's going.
So how do we miss DeepSeek? How did we all woke up
because it's like we didn't think we needed to look for it.
Right.
Do you know what I mean? We were so.
This is so good.
This is so good. It can't go wrong. It's going to continue going up. Who needs China? Who needs Europe? Do you see what I mean? We just weren't looking for it. And they always say great investors are people who anticipate other people's anticipations, right? And just no one was anticipating or didn't feel that they needed to anticipate anything else. This was working.
Still in that mindset?
No, look, I think that it's wobbling a little bit. I mean,
Microsoft headlines this week, plenty of other things.
Is the world short Magnificent Seven? You must be kidding. Is the world long China and long Europe? You must be kidding. They're just not. But clearly, the longer it takes and the harder it is for the S&P to get to new highs, sustain new highs, move on from new highs, and then sort of Europe's working, China's working, even bonds now in America are starting to work. I mean, heaven forbid. People start, the doubts grow. And the doubts will grow because, to begin with, they're so massively overweight. The Bank of America Fund Manager Survey, as hopefully you follow, but, in December, it just basically showed that people have never been more overweight US equities.
So we've got NVIDIA coming up tomorrow. It is an enormous stock, and it's swinging all over the place. Does the amplitude of that? Does the amplitude of NVIDIA's stock price continue as it has been? What happens when NVIDIA, dare I say it, misses, or even hints at?
I better hope it doesn't. But I think that taking a step back, what is tech? It's a disruptive thing, right? So there's no reason why the stock prices of the disruptive thing shouldn't be disruptive themselves. And they can be to the upside and they can be to the downside. But I think what you're speaking to is the concentration risk that everyone has been dragged into the US because, up until a couple of months ago, it was the Mag 7 and nothing else. Not a lot else was working. And so everyone's there, everyone's overweight, and therefore there is this great vulnerability, fragility, if it doesn't keep working to the extent that it has, and something comes along and just, what? DeepSeek? Suddenly it gets very vulnerable to the downside.
Can stocks actually go down, though, during a Trump presidency? Like, is there a Trump put? If things do go haywire, is the president going to step back in and say, calm down, don't worry, I got this, policy's going to be reformed, adjusted, changed?
Yeah, I mean, I think so. I mean, I truly believe the stock market is his traffic light. It'll tell him to go and tell him to stop. Obviously, everyone thinks that.
Yeah.
I mean, it's just a different level. Is it 5,800, 56, 54?
Where do you think the strike price is on that?
I don't know. I don't think Trump knows. My gut feel, I think people would worry if at 56, 57, there wasn't some sort of attempt, whether it's through fiscal or, pulling back on the dojo. People would look for something from the administration to say it's calming and hope it's not just, Mr. Fed, you've got to cut interest rates. That probably won't do it. So I think it's around about that level.
Do you think Doge could... everybody's trying to figure out whether or not Doge is going to have a significant effect.
Yeah.
Could Elon Musk cause a recession in America? Could Elon Musk cause a negative print?
Isn't it?
Yeah.
I mean, I think
what do you think?
He's controlling the long end of the yield curve right now.
Elon Musk is
where the
controlling
30-year Treasury go will be very, very dependent on how aggressive he's able to be with Doge. Look, you've got $7 trillion of spending in the US. That's what the government. You've got $5 trillion of revenues. You've got a $2 trillion deficit. They want to get the deficit from 2 to 1. They've got to get $1 trillion from somewhere. You can't get it from tariffs. Tariffs would need to go to 30%. Yeah. Right. So they have to do it through spending. So, I think they're going to be as aggressive on Doge, contracting the government sector as much.
Negative payroll prints?
It's possible, but I think the key is more that the US government is a $7 trillion beast. It's the third largest economy in the world. It's been growing 10% per annum for the past. So even just stopping that growth is going to have an impact on payrolls. The interesting thing, Guy, I think, is what's the impact on the consumer's psyche? Yeah. The consumer of America, pandemic stimulus check, war, energy rebate.
Government's got your back.
Yeah, okay. What do I need to save? And that's why you have a savings ratio in America that is quite low. And it may well be, and of course, smaller government is popular. Yep. Trump won a big mandate. This is what he's meant to end wars. He's basically made to make the government smaller, end the immigration sort of thing. A lot of things that are very popular. But if you take away that security blanket that the US consumer has, savings ratios, I think, have to rise. And I think that's the risk.
Even for the upper echelons of society?
There, I think it's more the housing market. But as you know, the housing market in the US is pretty
stagnant. Because they're the ones that are spending, though.
Well, it's not as if the lower income brackets are not spending, but yes, I think that's where the juice is. But again, that's a wealth effect. Stock market suddenly going sideways, housing market completely stagnant. So the things that drive that wealth effect, even though there's a lot of wealth there, it's not as if it's vanished. But again, the momentum is fading. The tailwind is fading, and when that does, in an economy like the US that is incredibly sensitive to the stock market. The stock market is basically the lead indicator for the economy. So if suddenly the stock market is not going up, economic growth is going to fade.
Michael, we're going to leave it there.
It's coming up. Tesla sales slump across Europe as rivals see an uptick in EV demand. We'll dive into those numbers next, and this is Bloomberg. Tesla sales plunging 45% last month across Europe as rival car makers saw a surge in EV demand. Now, despite strong EV sales, total sales in the region actually declined some 2.1% due to falling demand for plug-in hybrid, gasoline and diesel models. Now, for more, let's bring in Bloomberg's transport reporter, Danny Lee. Danny, thank you for joining us. So what exactly is driving the slump in sales?
Well, this feels more like a Tesla-only story when you look at just this fall in EV sales for them, that they're suffering across Europe, down 45% in January. The wider EV market in Europe up 37%. So rivals are catching up and performing outperforming as well in some cases, doing better than Tesla. And you just have to think, how much more is this a sustained issue for Tesla going forward, given the fact that you have Elon Musk, who's been very forthright in his opinions, particularly weighing in on politics, particularly in Europe. We've just had the European elections, which Musk has been very focused on. But across the piece, when you look at the performance for Tesla in Europe, it's not just in small countries. There are a lot of countries where Tesla has been performing badly, including in Germany, in the UK, where it has been lagging, and Spain as well.
How much of the impact, Danny, can be attributed to Elon Musk's politics, and how much is being swayed by consumer tastes or even Tesla's own internal inputs?
Well, when you look at the kind of input Musk has been having into politics, there has been some polling done which suggests there is a strong dissatisfaction with Elon Musk's views and weighing into very much national politics, national elections in Europe. And then on top of that, when you see the backdrop of Tesla upgrading its product line and the impact of them trying to chase more sales at the back end of last year, that means it's short on inventory. It can't necessarily sell as many vehicles or doesn't have as many in stock to sell. So there is that issue there of a confluence of impacts, which means that sales have been falling. Again, the question is how much more that will impact into February as well, given that the back end of last year in 2024, Tesla sales did slip overall.
Thank you so much, Bloomberg's transport reporter Danny Lee, with the very latest, of course, on Tesla. Now, up next, Bloomberg Brief. Danny Berger is in New York, so there's going to be a lot talked about in terms of Russia, Ukraine, President Trump, and, of course, these tariffs against Chinese chips. This is Bloomberg.